Nigeria has achieved a major milestone in its return to the international capital markets, successfully raising $2.35 billion through Eurobond issuance that drew an unprecedented $13 billion in investor orders. Now, the Debt Management Office, in a statement, described the issuance as a landmark success that demonstrates global investor confidence in Nigeria's fiscal discipline and long-term growth trajectory. Now, despite geopolitical tensions and the recent U.S. threat of military action over claims of Christian genocide, investor enthusiasm remained remarkably strong, resulting in an oversubscription rate of 477%. Joining me to discuss this in more detail is Dr. Omobola, who is macroeconomist at CSL Stockbrokers. Dr. Omobola, that is. Good morning.
Good
Many
morning.
thanks for joining us on the Global Business Report.
Always lovely to be here.
Always a pleasure to have you. Let's begin with a look at the numbers. You know, Nigeria received over $13 billion for its Eurobond issuance. What does this level of investor demand tell us about current positioning and global capital markets, that is?
Yeah, so thank you for that question. So I think what it basically reflects is just the investors' optimism and enthusiasm about Nigeria. So if we look back going the last 18 months thereabouts, the Nigeria reform story has been somewhat positive, right? We've seen, in terms of economic indicators, things are moving in the right direction. The Central Bank of Nigeria, they are putting in orthodox policies that are being well received by the market. And then you also look at it from this perspective that international credit rating agencies, the likes of Fitch, S&P Global, they've all upgraded Nigeria so far this year, which paints the story that, yes, this nation is on the right trajectory. And when you have those sort of building blocks in place, it creates rooms for where foreign investors are like, okay, let's start looking at this nation. They are doing the right things. And then we can see all through this year that foreign currency inflows have actually been coming into the country by foreign investors. So this story just basically reflects what we're seeing with this Eurobond issuance. Like you rightly mentioned, over 13 billion that was looked to come into the market, right, reflecting oversubscription over 5 to 6 times of what the government eventually raised. So I believe it just reflects the good reform story that we've been seeing over the last 18 months.
Right, so quite a significant number there, a very great bellwether for what to expect in the future, I would hope. But let's, as we know, this issuance also comprises 2 tranches. We have a 10-year and a 20-year tranche. Let's talk about the significance of the coupons levels for Nigeria's cost of borrowing and, of course, fiscal trajectory overall. But please also speak a little bit more about the details of these coupons respectively.
Yeah, so like you rightly mentioned, we issued a 10-year and 20-year note. So the 10-year note settled around the 8.6% level. It's important to mention that in terms of initial price guidance or what they were looking at, basically the range they were expecting from the market, that was roughly around 9.1%. For the 20-year bond, they were looking at getting probably roughly around 9.3 thereabout percent, but they did at around 9.1%. So from what we are seeing, that the enthusiasm around the Nigeria's reform story, the interest that we saw from foreign investors basically helped to lower the eventual coupon or the yield that was eventually reached for those bonds. So that in itself, it's a positive development. If we look back, we also know that Nigeria issued an Eurobond last year, a 10-year Eurobond, even to be precise. And as of last year, that was issued around the 10% levels. So you're saying that last year we issued something around 10%. Now we got that same issue at roughly 8.6%. So that just signifies that, between last year, December, and up until now, there is clearly that, Nigeria is moving in the right direction. In terms of risk profile, it's a little bit, much better. So that's why we're seeing a situation where, in terms of the coupon rates, this is coming down. So it just speaks to the general improving macroeconomic environment in terms of what Nigeria is now going to be getting from the international market.
Right, it certainly sounds quite encouraging, but we also, if we look at the participating investors, we saw participation from the UK, North America, Europe, Asia, the Middle East, from all over, really. What does this geographic diversity of investors imply about Nigeria's risk profile and, of course, access to diversified capital markets?
Yeah, so I think that's actually it's a very positive development, right? Because you don't want to have a situation where majority of the funds coming in are coming just from one, let's say, particular area or geopolitical area, right? So you are having diverse sets of investors. Yeah. So it also speaks to the fact that everybody's watching what you're doing, right? If we look at it back in retrospect over the last 1 year, investors that maybe would have gone into the Omo market, for example, in dollar terms, as at now, they'll be making returns close to over 30%. So that reflects that, okay, yes, these people are doing something right, and then everybody's eyes are around. So like we say, the world is now like a global village, right? So everybody is interested in what you're doing. If you are doing the right things, people would take notice, and then they would want to key into what you're doing.
Well, that's always good. That's always welcome information, and hopefully we can see a much better trajectory on this over time as well. Let's talk risk and opportunities now. Very important points there. Of course, as we know, these funds were intended to support the 2025 deficit, fiscal deficit rather, and other financing needs. But let's talk about the pros and cons of using external debt to plug fiscal gaps. So what should we know about both?
Yeah, so I would like to believe that majority of the funds received would be directed to capital expenditure, so financing, infrastructures, roads, and all those sort of, capital-intensive projects. Now, if that happens, we would want to expect that, when you invest in capital-intensive project or capital-stimulating project, what you end up doing is that you have a situation where you can stimulate economic growth. So investing in capital expenditure instead of recurrent spending that are just one-off without, a lasting impact on the economy. If we can redirect, a good portion of those funds into the capital side of the budget, you have a situation where you can therefore stimulate growth in the long run. So that is what we would like to expect. I know people would say that, we're already 1 year, we're already 1 month left to the end of the month. So what's going to happen? How are they going to use it? But I think that we're going to likely see a situation where what happened last year. So if we can recall, the 2024 budget in terms of implementations was basically extended to the end of this year. So we might have a situation where for this year, the implementation of the budget might be extended into next year just to give them time to deploy these funds they've received now to capital projects, maybe building of roads, other infrastructural projects that in the long run is going to benefit the economy. So that's it on the positives, what you might expect, right? Maybe another thing to mention is that these funds are more or less long-term funds, right? So you have 10-year issuance, you have 20-year issuance. So you are having a situation where you are locking in sort of this kind of levels at this point in time, so that in terms of near-term financing pressures, those ones are somewhat limited. So those are some of the benefits we see in terms of these funds that have come in now. But like I said, so far this goes into the capital side of the budget, then it gets to benefit the economy in the long run.
Right. And of course, knowing what the risk profile is, it's best to basically get the mitigation action in order, knowing both sides of it, the ups and the cons of it. Now, given the listing of these bonds on major bourses, we've seen London Stock Exchange, FMDQ Securities, Nigerian Exchange. How might liquidity and a more global visibility help influence future borrowing strategy for the country?
Yeah, so like you rightly mentioned, listing on all those exchanges, the London Stock, the Nigerian Exchange, FMDQ, it helps to boost liquidity, right? So it helps to ensure greater price discovery in the secondary market. You want a situation where people who, basically the investors who have purchased the Eurobonds now, they could sell part of it off in the future. So that's where the secondary market comes into play. And like we've seen, because you have much more liquidity, it also gives rooms for, yields on those bonds to moderate in the future. So once yields are coming down, it also means more gains for investors, right? So with more liquidity, with better access into different markets, it helps to ensure that these bonds are get to be relatively liquid. It means that you can easily buy, sell, and those sort of things help for better price discovery.
Right. Right, all right, good. We have very few minutes left, so let's just talk about domestic investors. We also saw quite a number of participants there. What implications does this have for domestic financial ecosystem, for the domestic financial ecosystem?
Yeah, so I mean, we live in Nigeria, right? And most people still want to have exposure to foreign currency. So the situation where we're seeing institutional investors, domestic investors keying into the Eurobond is just because, yes, you have maybe your portfolio or you have a bit of portfolio that you need to expose to foreign currency. We have investors, HNIs, institutionals that have dollar obligations. So buying into this now at roughly 8%, 9% levels, those are decent, let's say, coupon income that you expect to receive. So it helps you to hedge against maybe any foreign exchange exposure that you might get in or that you plan to take on maybe in the next couple of, let's say, months, week, depending on the investor's profile.
And I would imagine that this also applies to the alignment of local institutional investors.
Yes,
generally
exactly.
speaking, widely. All right, if you joined us midway, I've been chatting with Dr. Omobola. I don't know why I keep getting the name wrong. Dr. Omobola Adu,
yes,
who is microeconomist at CSL Stockbrokers Limited. I want to thank you so much for joining us. We've been chatting about Nigeria's $2.35 billion Eurobond issuance. Many thanks. We'll have you again very soon. You're most welcome.